traders. This is Blake Morrow. You were listening to the Morning Edge webinar. We are going to get started on our analysis process, of course. I need to update that. Every time I see that message, I'm like, oh, I need to update my office. But hey, before I do this, I had a couple comments, one from Daryl and then also from Dennis about the Canadian Swiss. This is a currency. First of all, you guys know I'm bearish the Swiss franc. I'm long the I'm long the dollar Swiss. I bought some Euro Swiss this morning. I'm long pound Swiss. Canadian Swiss is not a currency pair I wouldn't mind establishing a long position in. Here's the thing about the Canadian Swiss, though. All right, so Daryl was like, well, maybe picking it up at 70, and Dennis says, hey, we're getting close to historic lows. I'm in the process of building a long position. I like selling Swiss francs. I always like the idea of selling Swiss francs. I see the Canadian Swiss, and I see what you guys are talking about. This level right here, the spike low, is you could argue what that level is, because between your broker and my broker, we may have some slightly different prices. I do agree, if we get closer to 70, okay, something that looks like this, because we can mark that low. This low, again, the numbers that I have versus the number that you have via your broker on that day that the Swiss National Bank, remove the floor, is going to be a little different. So that's why I never mark that low, because it's different. You go to my broker, IG, Saxo Bank, whoever you're using, we're all going to have different numbers. So anyway, a move down to here might offer a good opportunity. The only problem that I see, and I'm just going to point out, I'm going to be Mr. Obvious right now. The only thing that I'm going to point out is that this is also it could be a flag pattern, so you got to be obviously very careful here. But the Canadian Swiss might not be a bad place to be on the long side. Getting down towards 70 cents, or maybe down towards 71 cents. I'm going to keep an eye on it. I think this is it's kind of alongside with the dollar Canadian. If the dollar Canadian gets up to 140, 150, 142 level, I think the Canadian currency becomes pretty attractive. So where do you start buying it against? Canadian Swiss would be in my wheelhouse of currencies to that's funny. Hold on, I gotta laugh. I have to say that it is one of those currencies that I would consider buying, would be the Canadian Swiss. All right, let's start with the morning analysis. So let's go over to the euro dollar, and we're going to mark up everything on our bias chart. So here's the euro. Obviously, we are holding the 618. We've been talking about the importance of the 618 and 618 level in the euro. We overshot it yesterday slightly at 107 and a quarter. You can see that this ended up being pretty key support right through here. I thought we might get to the 786. Obviously yesterday things looked a little hairy, and we were like, I don't know if it's going to stop. So, but it did. And by the way, for those of you that listen in or looking at what I'm doing right now, I draw on these charts every day and the next day. So the next morning you can see what I've drawn, and it's I think a lot of you can appreciate that, because we can go back to we can say, oh yeah, yesterday we were here, and or we were right here, and we saw that we were dropping down to 107 or whatever. We always kind of can review what had happened the day before and look ahead. So we knew that the 618 is going to be really important, and it obviously has been. We overshot it. And you can imagine right at this point in time that the candle was red, but then we set up some sort of little doji, and which gave us a nice consolidation. Now the great news is, the great news about what you're looking at right now is that today's uh, crap load of data that we're going to get. Just the data dump that we're going to get between the ADP, trade balance, minutes a little bit later, the ISM services number, and the employment index inside of it, which obviously people are going to be looking at very closely. When we get this swath of data today, we're going to influence the euro. We're going to get a whole lot of strong data, which is going to push the euro below the 618, and then, excuse me, and then we're going to push through these support levels, and that may take us then down to the 786, okay, ahead of non-farm payroll. You know what I got? I drew this down here yesterday. Somebody had asked me, hey Blake, yes, this was yesterday afternoon during the Lunch Money webinar, because I got a comment from BG, says, hey Blake, do I come back on the webinar later in the day? I always listen in the morning, but I'm curious if you come back on. Thanks. Yeah, I come back at noon Eastern, so 3 hours after I'm done here, about 4.5 hours from now, I come back on for an hour and a half. And yesterday during the Lunch Money webinar, somebody asked me, hey Blake, where's a good support level for the euro dollar? I'd say if we get pre-non-farm payroll, I said if we get down here to 106.30, 106.40, that might be a good area for a bounce ahead of non-farm payroll, where we drop, we hit support, we get a little bit of a bounce and consolidation before Friday. So today, if the data is strong, if we get, because you have to imagine, I have to take a step back. You also have to imagine that the data that we've gotten over the last couple of days, or go back and look at the data that we've had here in the U.S., I think a lot of the data points have missed. And if you look at ISM manufacturing data on Monday came in weaker than expected. Yesterday we had some regional PMIs come in a little weak. Look what the dollar's done since Monday, even since the ISM. We've gone from, and we had weaker data, and we dropped from 109 to 107.50 in the euro. How about if we had strong data? Where the hell are we going to be after that? You know what I mean? So if we have some strong data today, I think a very doable target for the euro dollar is down at 106.40. Okay, so I'm going to write that down as support. Even though we have support right here, and I'm going to write 2 levels of support. Let me take that back. 107.10. So we're going to say 1.0640, 1.0710. Okay. Hold on one second. Okay, just trying to blow my, yeah, you guys don't need to hear that. Anyway, so those are 2 levels of support that we have for the euro dollar. Resistance on the way back up, like let's say the data is weak, okay, which, could very easily happen. Well, if the data is weak, what I think is going to give us a lot of problems is a move back up here to 108. You see this? Okay, so we have 108, previous support, see a spike low. We ended up holding it though before breaking down. This 108 level should give us a lot of troubles on the way back up. Okay, and so on any, let's go, trying to grab that red line. Here we go. So any move back up to 108 should be a bit of a problem. And if you're looking to trade today, yeah, I think the better trade, rather than trying to flip a coin and figuring out which way the data is going to, you don't know if the data is going to be good or bad. I don't. You don't. People think they know, but they really don't know. They just take their best educated guess, but no one's a palm reader or a fortune teller. They're not going to be able to tell you what's going to happen. Your better probabilities, in my opinion, from right where we currently stand, is saying, okay, well, I would trade the euro if it dipped down to 106.30. I might take it to the long side just as a counter trend trade and maybe take a small position, or if the data is a little weaker, we get a rally back to 108 and taking a short when you get back up there to go back in the direction of the trend, rather than kind of sticking your neck out right now and trying to bet on red or black because you're not in Las Vegas, at least unless you're at home getting free drinks somewhere. Let me know. I'll come over after I'm done here. But the probabilities are kind of working against us where we're currently at. Your better trades are going to be 108 or down here 106 and 106.40. Okay, so like for me, I have no exposure in the euro dollar, but if we get back to 108, I wouldn't mind taking a short this morning if we can get back up there, depending obviously how weak the data is. If ISM comes in 3 points below expectations, I'll probably go hell no. We're going back here, but within reason, I think 108 is probably a decent area to short, and 106.40 you can probably look for a bounce. Okay, so resistance 108, and obviously we're still range bound in the euro. I mean, if you look at longer term, I try to give you a longer term bias here. We're still range bound. I mean, we are trending lower, but you can see over the last year, I mean, we've been bouncing between 105 and 117, and we're just kind of in the range. I do believe that we're eventually going to break down, and I do believe that we're eventually going to break lower. I just think that currently we are obviously range bound. All right, let's go over to the cable. The pound obviously has been extremely bearish. This thing, I even tried to pick up some cable on the crosses a couple of days ago here. We were down here at the 161% extension. This move here, when we were at that last 161% extension, you can see we're fighting some very strong horizontal support here. I'm going to delete everything really quick. We can redraw everything this morning. Okay, so obviously, just because I need to point out this is really, really, I mean, these are some major support levels. Obviously, I keep saying obviously, but the Brexit fears are real. They're real, and I don't know if the market's really factored in all the risks associated with a potential Brexit. I really don't think the UK is going to leave the EU or anything like that. But I think the risks to the risks that investors will see really hasn't been fully priced in. Now, we still have a lot of time between now and referendum votes, and things are going to get a little volatile for the cable, going into the next couple of months. And you can see we're selling off pretty aggressively, but we're also selling off in a fashion where we now have a risk of posting some sort of reversal soon. When you start getting these descending wedges like this, however you want to draw them, whenever you start getting these descending wedges, the risks of a reversal become quite high, especially as you're, floundering into some pretty key levels of support. You take like this last big up, low to high, 161% extension is around where we're at. It's close to. So when I look at the cable, the way I look at it is it's too bearish to get long, but it's too oversold to be short. You know what I mean? And I suspect that we're building some sort of descending wedge, and I'm trying to be a little bit more granular with the technical analysis here. We got some sort of descending wedge that we need to be aware of. Okay, so again, I'll say what I just said. It's a little oversold to be short, but it's a little too bearish to be looking for longs. You know what I mean? So it's kind of a pickle. It's like I really don't want to trade the cable right now. I think overnight or today, support here at 146. We could even grind lower as we skate across the bottom of this trend line. We might even be able to skate down to 146. I think that should offer support today, somewhere in the 146 neighborhood. I don't think it's going to be strong support. I think if we just get down there, it's just grinding. And until we can scale back above 147, I think that's going to take some of this downside pressure off the cable. Okay, so we get back above. You can see spike low here, spike high there. You know, we're just struggling on approaches to 147. If we can get back above 147, that will take the downside pressure off. I'm really not interested in the cable right now. I'm really not interested in doing much. It is bearish, but again, I'll say it one last time. It's too oversold to be shorting, but it's too bearish to be long. So, when I have a situation like that, I just kind of throw my hands up and say, well, screw it. There's a lot of other, great opportunities out there that don't have to waste it on, the cable. All right, so here's the Swissy. So the Swissy, as you guys know, has rejected at the 618 retracement. It was a big rejection yesterday. It was at 101.20. I've been contemplating, exiting my long, and then I said yesterday, I can't do it. I'm too bearish the Swiss franc. If you guys don't understand why, the Swiss National Bank, has a they have a negative deposit rate, a 3/4 basis point that doesn't allow any institutions or any banks or any type of any big institutional money can't stay long the Swiss franc for any long period of time. It costs too much money in a yield-stricken world. To have 3/4 basis point taken right off the top annually, you can't hold a Swiss franc long position. It's just impossible. Especially if you're clawing your way up to try to make 3 or 4% annually. You're how in the hell are you gonna take that kind of hickey? So, I'm extremely bearish the Swiss franc. I longer term, the Swiss franc, you see this, these longer term breakouts. Okay, these are multi-decade moves. You got a long-term breakout. All we did is we retested that support and we moved higher. Fortunately, I have a decent cost average at 99 cents, 99.07, and I physically can't get myself to exit the trade right now, even though it seems yummy to take some hefty profits off the table. Longer term, I feel that the Swiss franc is eventually going to go down and other currencies are going to rise against it, as long as the Swiss National Bank doesn't change its stance. What are they going to do? Put a new floor in the Euro Swiss at 120? Good, do it. The dollar Swiss will be trading at 110 quicker than I can say lickety split. I don't have a floor to remove now, so now I'm just sitting in a long trade. Now, here's the thing. If we get a break above 102.20, let's just imagine we have a strong non-farm payroll. If we break above 1.0120, we break above that, it's going to rally pretty significantly. That's going to be a massive breakout point. It is a 618 retracement. But as I told you guys yesterday, what I'm more interested in doing right now is I'm more interested in buying a dip down to 1.0030. That will be this previous resistance that should act as current support. I'm actually looking to add to my dollar Swiss long exposure down here. So 1.0030 is where I'm looking to add. So if we get a dip down there, that should be good support. And if you're not long and you're like, I really want to be long the dollar Swiss, I think that's a better place to be long than right here. I do believe that if you buy the dollar Swiss now, you close your eyes, you open them 6 months from now, you're probably going to be happy that you bought the dollar Swiss. I think there's going to be a lot of ups and downs between now and then, so I don't think that's a wise, trade just to get long something and just close your eyes and pack it in and I'll see you in the summer. But I do believe that longer term we're going to continue to trend higher in the dollar Swiss, and I think the Swiss franc is going to continue to trend lower. Like I said, as long as central banks don't change a whole lot between now and then. Buying it down here, though, is probably a better price than trying to just buy it right now. Let's go over to the dollar yen. So the dollar yen, I have not. I'm a little bummed out because obviously I closed my dollar yen shorts from last week. I was short up. I was short here around 120, 120.40, 120.50 on last Thursday before the New Year's. I closed out for 140 pips down here, and I have failed to reestablish my short position. So obviously I'm a little, I don't want to say disgruntled. I'm just a little bummed out that I haven't been able to. We haven't seen a bounce. I mean, I've been hoping for a bounce in the dollar yen, and obviously with U.S. equities continuing to weaken, getting these bounces have been really tough. So, looking at the dollar yen right now, I think we have to look at it something like this. Okay, see this trend line here? All right. Any move back up to this resistance, you're going to find sellers. This is going to take off the downside pressure. We have to break 118.80 to take the downside pressure off. 118.80. It is bearish. Now, where's support? Good question. Okay, here's your daily chart. Support's at 118. Below 118, it gets freaking ugly. I mean, there's our longer term analysis of the yen. You guys know why I've been, bearish the yen. Bullish the yen, bearish the yen pairs. I have to make sure I say that correctly. Whenever I say bearish the yen, it doesn't always translate to. I've been bullish the yen, bearish the yen pairs. Here's the reason why I have not updated this chart in probably a month and a half. You guys have seen the same chart. I don't have to. Big rejections. I was short a lot up here, reestablishing short positions. I don't have to go into all that. But real key support is right here. We get below 118, it could get unruly. And that's when you start looking at, you start looking at, U.S. equities. You look at the Nikkei, you look at the DAX, and you go, man, am I really stepping in front of a freight train right now? Because my opinion is that the yen correlation with equities will continue to strengthen as equities weaken. So if equities continue to weaken, the yen will continue to strengthen, and that correlation will tighten. So what I mean by that is if we drop below 118, it's probably telling you, if you're looking at like the DAX, it's probably telling you the DAX is breaking through the 618, that everybody's buying it right now. Everybody. By the way, I don't know if you guys have seen, all you European traders, everybody's trying to buy the DAX right now because obviously you want to pick a bottom, and you want to pick a bottom, but picking bottoms, a lot of times you get smelly fingers when you pick bottoms, and there's might be a lot of smelly fingers coming up pretty soon, but if the yen's breaking down, DAX is probably trading down here. Yen breaks down through 118, Dow futures are probably, well, they're almost down 300 now. They were only down 250 when we started. So, Dow futures are probably down 350. Okay. The markets are probably going to be under duress should we break below 118. So 118 is really key support here. Okay. Key support. When I put an asterisk next to a support or resistance, that just denotes that it's a very important level. Let's go over to the dollar Canadian really quick before we take our next break. So here's the dollar CAD. We've talked a lot about it. Here's 161% extension. I don't have to beat this one up too much, but you can see why I exited here. It was 161% extension of the last consolidation. You guys know longer term charts. We are approaching, our longer term weekly target comes in around 141 to 142. I don't have to talk too much about that. I just want you to know why I exited longs, but I'm not in the belief that we're actually done. Just because I exited a long position doesn't mean that I don't think that we can't continue higher. Crude oil just broke down into new trend lows just moments ago. Crude, yeah, George says new lows in crude. Crude continues to break down. Dollar Canadian will probably be trading up towards 142 by the end of the day. Especially if we trade down towards 33 bucks or whatever. So 101, whatever the high is today, it's 101.02 or 141. 101, 141.02. So 141 is resistance. Beyond that, I'm going to say 141.50. So 1.4100, 0.4150 is resistance, and then 142. Just every 50 pips is going to be resistance there in the Canadian. But where can we buy it? I mean, frankly, I would love to buy the dollar Canadian. If we get a nice dip today, I wouldn't mind being on the long side. I'd do it right here. Not there. Where? Under where? It's a little joke I play with my kids. Well, they play with me. They're like, hey, Dad, look under there. I go, underwear, and then they just giggle nonstop. Okay, 140. If we can get a dip down to 140, that's obviously the breakout point. That's the most obvious place to be on the long side of the dollar Canadian. Sometimes obvious is good, okay? It's a big round number. If we get a dip down to 140, that should be really strong support. All right, when I come back, we will continue on with the Kiwi Aussie dollar index. We'll take a look at the peso, the Nordic currencies. Don't go anywhere. Thanks, everybody, for being here. Be back in a few short minutes. All right, guys and gals, this is Blake Morrow. We actually got to get this. We have to get this analysis finished because we have ADP non-farm coming out in like 14 minutes. Toy space that today is one of those days where we get cut short with the analysis coming through. Hold on, really quick. What is hell happened here? Give me 1 second, guys. Okay. All right, sorry about that. I was just making an adjustment on my screen. Okay, so let's go into the Kiwi is next, right? Yeah, we did the Canadian. Okay, here's the Kiwi. So the Kiwi is coming into really key trendline support. So let me review a few things with the Kiwi dollar. And yesterday's dairy auction results put some downside pressure on the Kiwi. Obviously, you can see this downside pressure from yesterday. Notice that we're just consolidating. Bearish price action in the Kiwi thus far. But the Aussie sold off pretty aggressively, and the Kiwi has not followed suit. That's just one thing to note. We came out of an ascending wedge. We talked about a longer term false breakout. Remember earlier this week, we're like, the problem with the Kiwi here is you had this big descending trend line. We broke out, everything was looking nice and peachy keen, very bullish, and then all of a sudden the bottom fell out of it Monday, right? Well, that caught a lot of people off guard because you got a lot of people establishing longs here, a lot of shorts, covered. So now you're coming out of the ascending wedge into trendline support. This is really critical support. See this trend line right here? Okay, that comes in right at 66 cents. Now it's big, not only because it's trendline support, but it's also the 618 retracement. So you can see the 618 right here. Okay, a couple ways you can trade this, in my opinion. Excuse me. I'm gonna have to put it on mute. Hold on. Okay, so a couple ways you can trade this. 66 cents, and guys, I just have not been able to shake a cold since I went to Las Vegas just before the new year with my family. It's just nonstop. But I'm getting better. It's just tail end of it. I feel. So 66 cents. If you want to play the long side of the Kiwi, which just so you know, I'm short Kiwi. Now, I'm not short the Kiwi dollar. I'm short the Kiwi against crosses. I'm long the pound New Zealand, Euro New Zealand, Aussie New Zealand. So I'm short the Kiwi on the crosses. But if you want to play the Kiwi to the long side, you wait till we get to, this 60 cent level. You get down here and then you play it long, all right? Or If you want to play it to the short side, you're like, well, screw that, Blake. I think the Kiwi's going to hell in a handbasket, and I think the Kiwi's going to be trading at, 60 cents in the next month, and that's your attitude. Then what you may want to do is be careful shorting it before you get to 66 cents. You might short a little here, and should you break through 66 cents, then add to your position. So this way, if you're wrong and it starts to move up, your risk is reduced because you have a small position. And if it breaks through 66 cents and you're right, then you can always add to your position. Then you'll have a decent cost average on the way down as the momentum builds. I ultimately think we're breaking lower personally. I personally believe that because I think U.S. equity markets are weak. I think commodities are continuing to stay weak. I think there's too many people out there trying to call the quote-unquote bottom in commodities across the board. Every analyst you read, every bank, 2016 is the year that the commodity markets bottom. Sure, they could bottom this year. They might bottom, 20% lower than where they're at right now, but I think that it's possible. But I think everybody's trying to play into that thesis that the commodity markets are going to bounce, and that doesn't mean it's going to happen now. I actually did think that the commodity markets, the commodity currencies still look very weak. All right, so anyway, 66 cents is critical support for the Kiwi. Really critical. Resistance, any move back up to 67 cents. You have to imagine this is this is where downside pressure resides, but you can probably do this. It's not very clean, but okay, 66.80. How about that? Remove that line. So we get above 66.80, and it'll probably relieve some of that downside pressure. Okay. We're just a few minutes outside of ADP, so we are in a big longer-term range. Let's go over to the Aussie. All right, here's the Aussie dollar. Okay, so here's the Aussie. So the Aussie cracked through trendline support, all right? Cracked through trendline support, cracked through horizontal support, and you can see the Kiwi. I mean, the Aussie's just getting killed. I'm surprised the Kiwi hasn't played catch up yet, but Aussie just getting destroyed here. And so you got to figure. Let's delete all this stuff really quick. I'm gonna delete and redraw. So just give me a second. Okay. I want to redraw this first and foremost. So let's take this channel that we were following, right? We'll more than likely we'll need that line again, I would think. Copy, paste. It was looking something like that. So we cracked through support here. Now, if you go from lows, the lows all the way up to the highs, which will be right there. Okay, we cracked through the 618 as well. 786 retracement comes in at 70.15. So 70.15 should be really key support today. If it has to be obviously strong U.S. data today, but 0.7015 should be support. Now resistance on rallies. I mean, I'll put 71 cents, but the good news here is if it's weak U.S. data and we pop back above 71 cents, you're probably going to get a pretty decent squeeze because it'll be a false breakdown. You know what I mean? That's not. I'm not guaranteeing that. I'm just saying that if the data is weak, we'll get probably a nice reversal. Okay. But we have to get back above, we're going to have to get back above 71 cents. So that's resistance for now. know. And we're still in a range. Longer term, we're in a range, even though it's bearish. Like the charts are bearish, but you can see we've been range bound for quite some time here. For the last several months. But longer term, obviously, we're in a very bearish trend. All right, let's go really quick over to the dollar index. Here's the dollar index. We cleared the 618. Notice how we're consolidating above it. Let's zoom in. No. Okay, here we go. All right. So we clawed our way above the 618 yesterday. I didn't think we were going to be able to break that. We did, and we're consolidating above it now. And so if you take a really, here, let's grab this line. I'm going to move it right here. Okay, I'm going to remove this fib. Just so you know, that's the 786 retracement. You know what? I don't need to do that. I'll just do it like this. All right. Now I'll zoom in. And let's do this. Okay. So this is a 4-hour chart of the dollar index, but you can see this is the 786 retracement. Spike high, spike low. So now we know that that is support for the dollar. It is at 19.15. 99.15, I'm sorry. Did I say 19? Be 99.15. Resistance 99.80. 99.75, 99.80. I'll put 99.75. Don't write off the dollar, guys. I know. The natural inclination is for most traders is I'm going to short the dollar. Dollar's overbought. It can't go any higher. The positioning's too big. There's too many dollar bulls out there. Remember, the dynamics of the dollar have really changed this last year. First time in since I've been in the business. I've been trading, and in the financial business. I started as a broker in 1995. So I've been in the business for over 20 years. When I originally started as a broker, I've been trading for almost 20 years. The only thing I've ever known about the dollar is it's a piece of crap. It's a piece of garbage going to zero. We can wipe our asses with it. I'm going to use it before I use my toilet paper. The attitude towards the dollar has really shifted over the last year. There's a lot to be said for that. I think positioning is going to be lopsided for quite some time. Institutions, corporations, banks, they're have to establish long dollar positions, and it's probably going to be that way for a while. And I know, like I said, the natural inclination is just to short the dollar because it's going. Everybody's too bullish the dollar. It can't go up any higher. Now, crude couldn't go lower at 60 or at 50 or at 40. Just be careful with the dollar. This is very much a flag pattern or a bullish wedge pattern developing on the weekly charts. So just be careful with it. Okay, let's go over to the, oh shoot, damn it, we got 2 minutes. Let me just see if there's anything happening with the peso. God, the peso's right up against its highs. Holy crap. Oh my God. Like I said, I think the peso is going to 18. I don't think if we get any more risk aversion, this thing's going to be breaking out. A lot of people have been trying to fade that, but there's no reason to fade the peso. None. That's bullish as bullish gets. I don't even know where we're going to go next after this. I mean, next stop in the peso is going to be, yeah, 18 is 161% extension of this last consolidation. I mean, that looks bullish. I will not deny. Norwegian krona continues to be really bullish. Swedish krona, because the Riksbank says, "Oh, we want to intervene." It's nudging its head right up against resistance. Here's your bias chart, but we got ADP non-farm coming out. Stand by for ADP non-farm. The market is. Oh, hold on. Where am I?